Hey, social media, it's Chris Versace again, thematic Research's Chief Investment Officer, and I want to spend a few minutes today talking with you about the December housing starts. And while you say, well, December housing starts, that doesn't sound like a big thematic investment strategy. It's true, but the reality is that we like to always pay attention to the data and listen to the data so we make sure we understand what's really going on, not getting caught up in all the talking heads speak. So, the question is, what is so important about the December housing starts report? Well, first and foremost, as I look at the numbers, here, the December housing starts report came in weaker than expected. Overall, people were looking for about 1.3 million units on an annual basis for the month of December, and it came in around 1.192. Big miss on single-family homes, multi-family structures, that's typically apartments, that came in flat compared with November. So again, big miss, single-family housing starts for the month of December. Now, what's happening? Well, we're seeing some of the stocks get hit, yes. We're also seeing companies that deal in non-residential construction get hit. And let's remember, residential constructions, homes for the most part, is very different than non-residential construction. But here's the thing. Why did the December housing starts get hit, particularly in the Northeast and the South? Answer: severe winter weather, which, as we all know, construction during great weather is very favorable, very easy, but during times of inclement weather, which in this case, given the time of the year, it means severe cold temperatures, winter storms, it can be a real headwind to construction activity. So, what does this mean? Well, in the coming weeks, as we head into earnings, we're likely to hear companies that are tied into construction kind of issue potentially weaker than expected earnings, again, because of the severe winter weather at the end of December, particularly in the Northeast and the South, and the impact of the cold weather near low records in terms of temperatures, and some couple winter storms as well, again, Northeast and the South, but also in the Mid-Atlantic. We could see those companies issue a softer outlook for the current quarter, again, because of what we're seeing in January. Now, here's the thing. Before we get through the end of January, we're going to have the President Trump's first State of the Union address. And one of the things that he's widely expected to talk about is going to be his Rebuilding U.S. Infrastructure Framework. If we get that framework, and we'll probably know next week if we do get it, because again, the State of the Union's on the 30th, if we do get that framework, we could see construction companies get a pass, particularly those that look at non-residential construction. Again, there's huge need to rebuild roads, tunnels, dams, bridges, airports, and so much more. And it's those companies that serve that market that will see the benefit from the rebuilding infrastructure framework. So bottom line is, expect some bumpy reports coming from companies that deal with construction. But if we get the infrastructure framework coming out of Washington before the 30th, we might see the pain be alleviated. Either way, I'm a buyer of non-residential construction names on weather-related weakness. I just think that it sets up for a great opportunity as we head into the spring from post-hurricane rebuilding, but also, too, from the infrastructure rebuilding framework that has to happen. I say that because if we look at the American Society of Civil Engineers, their report card for U.S. infrastructure, D+. That's a pain point that has to be addressed, and I'll be doing it with our subscribers at thematicaresearch.com. Thanks for listening.